Okay, traders, welcome back to the Price Action Labs YouTube channel. Here I had a requested video on the power of three. So we're going to be going over the power of three in this video, and we're going to combine it with regular ICT concepts as well as order flow, right? So just a quick heads up, if you're not using order flow in your analysis, you are going wrong. And this is the reason your strike rate isn't as high as it can be, right? So let me give you an example, right? You're using the power of three, and we all understand this indicator over here. We all understand how this indicator works, right? So we're using this indicator. But this indicator alone has to be used with other concepts. Let's break this down, right? You need to understand the liquidity sweep. Liquidity is very important because it gives you context on where the manipulation has occurred, right? So let's just break this down in terms of ES. This was on the 17th of March, right? So yes, we have an Asian range just over here. This is the Asian range in orange, and this is what accumulates liquidity, right? This is the accumulation phase of the market. So I'm just going to put dollar signs over here. This represents buyers and sellers exchanging at a fair price, right? We have an accumulation. It's a low time of day. So now we have a manipulation just over here. So price has taken out this Asian range low, and we have a manipulation just over here. This you can refer to as the ICT Judah swing or the turtle soup or any of these other fancy names, right? For me, I just like to call it a manipulation. So this is our manipulation. Let's just label that in here, right? So manipulation, right? If I can spell that, that's manipulation. So once we have a manipulation, you're now looking at the next thing, which is fair value gaps. And fair value gaps is the lifeblood of my trading, right? Fair value gaps is probably the only ICT concept you need outside of the power of three, and it is the most important concept. So fair value gaps, right? So let's kind of break this down. And I often get questions about this. So I'm going to clear this up for the crowd, right? I'm going to clear this up for the crowd today. So when you have a fair value gap, right, we can see right off the bat, there's two fair value gaps over here. And the question I often get is how do you know which fair value gap is going to get hit, right? So we have a fair value gap just over here, and we also have another fair value gap resting over here. These are our two fair value gaps, right? So you're going to ask me now, price action labs, how do you know which fair value gap is going to get hit, right? Because we could tap off this fair value gap, and this could be the rejection, or we could come down to here and this would be the rejection. So the truth is you need to understand what's going on with the order flow. So let's break this down. Once price comes into your fair value gap, right? So we have a fair value gap after taking out liquidity. Now, the next thing we're looking at is the two things inside of order flow. We're looking for volume and we're looking for the bid and the ask. And these two things are often married together, right? These are two things that are married together. This is very important to understand, right? So let's break it down to the regular candlestick chart once more time, right? So now from here, we're going to be combining this with the power of three because the title of the video was power of three, right? But the power of three is one of the simplest concepts you can use, right? Let's go down to the 5-minute time frame. Now, on the 5-minute time frame, it's actually really simple to understand this, right? And you need to understand the steps in terms of what I'm going to explain to you today, right? So when you use the power of three, I often use a 10 a.m. power of three in the New York AM session. And it's really this simple. You want to be buying below the 10 a.m. Eastern. It's that simple. You want to be buying below the 10 a.m. Eastern. So what you're looking for is for price to come into this area or into this area. Now the question becomes, where are you looking for an entry? Are you looking for it here or are you looking for it here? So this is a great question, and we're going to be breaking this down. This is kind of the lower time frame mastery, right? But when it comes to power of three, you want to make sure you're not using the power of three blindly, right? Every single top power of three trader will be using it with fair value gaps, and they will be using it with the order flow, right? So without order flow, it's not going to work. It's that simple. So let's break this down. Let's go down to the 5-minute time frame, which is where we are now, right? So we've entered this fair value gap over here. So we're waiting for price to come into this fair value gap. Now, this is very important to understand. We have this rejection just over here, right? So price has given us this rejection. This is very important to understand. Let's just break this down. Price has given us this clear rejection over here. Now, what do you understand from this rejection, right? In terms of the power of three. So the power of three is telling us one thing, right? We have the 10 a.m. open all the way up here, and we have come into this area. Already we are lining up for an A plus trade, right? This is an A plus trade just over here. This rejection is an important rejection. What makes this rejection important? Well, there's a few things. First of all, we see price has come into a bullish fair value gap. So we've come into a 15-minute bullish fair value gap. And also we are below the 10 a.m. Eastern. So we're using the power of three in context, which is the most important thing. Okay, so let's just break that down again. So we're now below the 10 a.m. Eastern. Now from here, we're going to be going over the order flow, right? Because the order flow is the most important. So we can see here prices tapped into the same exact fair value gap. Let's go down to the 5 minute time frame and see what we got. All right. So on the 5 minute time frame over here, let's kind of break this down even further, right? So let's just break this down. So now that we've come into this zone, I want traders to understand what is really going on inside of this zone over here, right? This zone is super important. So this rejection over here corresponds to this rejection over here. So I'm going to zoom in so everyone can see this, right? This yellow box corresponds to this candle over here. This is very important to understand. Now, I want traders to understand one thing, right? Let's go back to the candlestick chart. Now, when you see price coming into a fair value gap like this, right? When you see price entering into a fair value gap like this, you want to see sellers failing in this region. Sellers must be failing, right? So what does that mean? You want to see a ton of aggressive sellers over here. So you want negative delta, right? So negative delta is just red delta, right? This is going to be in red. So when you see negative delta or red delta, it shows you sellers are very active at this area. Aggressive sellers are active at this area. This is what we have just over here, right? So we see so much red. In fact, when we go in and we look at the candles, we see 128 for 14. So we see so many aggressive sellers compared to the aggressive buyers, right? What's also important to notice that we have a 5 and a 0, right? We also have a 0 over here, 19 for 0, and we also have another 4 for 0, as well as 181 for 19. So what you can see just by looking at this rejection and the next rejection is that we have a lot of aggressive sellers in this area. Now, do these aggressive sellers get rewarded? Let's go back to the candlestick chart, right? Do these aggressive sellers get rewarded? Well, in fact, they don't get rewarded because if these sellers were rewarded, they would have successfully broken the zone, right? They would have broken below this area. But in fact, they haven't. So you want to look at it logically. You want to look at it logically. You want to ask yourself this one question. The sellers have failed, and the reason they failed is because we've rejected above this area, and we've also left a small fair value gap over here. So this is going to be our POI. This is a 5 minute POI. So we've rejected off this area, and now we've left a POI over here. Just to make things clear, we've left a very, very tiny fair value gap over here, right? This is the fair value gap. So notice how from here, let's break this down again using the power of 3. So the power of 3 shows us one thing, right? The power of 3 shows us that we're below the 10 a.m. Eastern. We've rejected over 15-minute fair value gap. And now we're waiting for a further rejection of this 5-minute candle, right? 5-minute fair value gap, sorry. So let's break this down from the order flow. So notice how we have a ton of aggressive sellers, but they haven't been rewarded at the fair value gap, right? This is super important to understand. Now from here, what's even more interesting, let's break this down. So we see the fair value gap just over here. This is the bullish fair value gap over here. Now let's break things down again in terms of this on the order flow and ATAS platform. So look at how prices come into this area. And I want traders to understand you don't need to read every single number. In fact, reading every single number is the worst way to go about it. You want to be looking at specific bold patches, as I call them in the order flow. This is the ATAS platform, ATAS. You want to be looking for the bold patches. Now, the bold patches are telling you who's aggressive and who's passive, right? So we see a bold patch over here. We see 459 for only 235. So it's roughly double the amount of aggressive sellers compared to the aggressive buyers. We also see that over here, 162 for 61. We also see 181 for 101. And most importantly, we see a 1 and a 0 at the bottom. So what does this show you? Just by zooming out and not being able to read the numbers, we see a lot of aggressive sellers over here. They fail. We then see price leaving a bullish fair value gap. So we're seeing sellers fail and price is giving us a bullish fair value gap. So let's just go back to the candlestick chart, right? We see here sellers have failed, right? These sellers here have failed, right? Sellers have failed inside of a bullish fair value gap. Notice how we're below the 10 a.m. Eastern. So this is tick, this is tick. Now we're coming into a 5-minute fair value gap, which is also a tick, and we're analyzing the price action in this area. So let's make the chart a little bit clearer and let's really understand what was going on inside here. So price now, if we just play price on, we see price coming into this area. We want to understand what is going on inside of this wick, right? And this wick was given just over here, right? This wick is so important. So we have a green candle, right? We are expanding upwards with a green candle. But what's really happening is if we dive in, we saw so many aggressive sellers and we see more aggressive sellers over here. The volume has dried out. We see 1 for 0. So the volume here is tiny, which means that sellers have failed And price is no longer interested in trading here because the volume is low. A low volume indicates a lack of interest between both the buyers and the sellers. It's important to understand that. Now, once you have this in place, what you can see is sellers have failed. So buyers are in control, right? Aggressive sellers have been absorbed by the passive buyers. And that is exactly what has happened over here. So now that we see price breaking with the body over here, we can comfortably place a long with a stop loss just below this fair value gap. And now going back to our regular power of three concepts, where do we look to target? Well, we simply target the high of the candle over here. That's a 1.5 R trade, but really you want to be targeting a 2 to 2.5 R trade, right? So this trade did have some run rate. We saw price coming in, eventually tagging our entry again before going to the upside. So what I want traders to understand and take away from this video is when you're using the power of three, the reason you fail at using the power of three is because you're not using the power of three with all the correct concepts, right? Let's break this down one more time, right? So you want to be buying below the 10 a.m. Eastern. So we're really going to break this down. You want to be buying below the 10 a.m. Eastern, right? So, oh, sorry about that. You want to be buying below the 10 a.m. Eastern. So buying here below the 10 a.m. Eastern, right? You want to be buying off a 15-minute fair value gap below the 10 a.m. Eastern. And it's very important you understand what's going on here. Very important. This here, ladies and gentlemen, is order flow. So if you're not using order flow, this is probably the reason your power of three is inconsistent and it's not giving you consistent results. So the question now becomes, why didn't we buy from here, right? Why didn't price come here? Well, you never know for sure where price is going to react. But based off the order flow, what we saw over here is we saw a lack of volume over here. So we know that sellers have failed here and we know the volume has dried up over here. So this shows you that the market isn't interested in lower prices because as the market moved lower, sellers were not rewarded because we were bouncing off the fair value gap. So when you see a low volume, with aggressive sellers that aren't driving the price lower, it means the fair value gap is strong and you should be looking for buys, right? So what's ultimately happened over here? Let's break this down one more time. Price came into a 15-minute fair value gap, right? So we had the 15-minute fair value gap over here. Now from here, price came into this area and we rejected with aggressive sellers, right? So these are aggressive sellers just over here. Boom, aggressive sellers. Now from here, we saw price leaving a fair value gap over here. How did price behave in this area, right? What did we see over here? We saw aggressive sellers over here. Boom, aggressive sellers, aggressive sellers. No reward. That simply means you take the buys, right? You take buys from here. You can have your stop loss here, or if you want to be more aggressive, you can have it near the zone itself. And boom, there's your 1 to 2 hour trade. So it's not difficult to use the power of three. You just need to understand what you're looking at in terms of order flow. So let's go back to the overall analysis of how we're going to be looking at this, right? So we want to start everything, right? We start everything with the power of three. We start everything with the power of three, right? So once you have the power of three, you want to understand where the fair value gaps are. So when price comes into a fair value gap, right? Let's sum this up. When price comes into a fair value gap, yep, you are now looking for your power of three. So you're going to have your candle opening somewhere up here. The candle will open, the candle will come down, right? And then we'll eventually shoot back up to the upside, right? So we're going to have the low of the 10 a.m. Eastern candle over here, the same way we have over here. The low of the candle will always occur inside of a 15-minute fair value gap, right? This is the key to it all, right? And if you're stuck, always refer back to the ATAS platform. What is going on between the buyers and the sellers? What is going on with the volume, right? So if you like this video, give it a like, give it a thumbs up, and I look forward to seeing all of you in the next one.